Guten Abend, meine sehr verehrten Damen und Herren. Mein Name ist Philipp Ozenter. Ich darf Sie ganz herzlich in der Österreich-Amerikanischen Gesellschaft begrüßen. Die US-Wahlen werfen ihre Schatten voraus und dieser Schatten, der besonders unsere Geldbörsen betreffen, nämlich die Finanzmärkte, sind besonders relevant und interessant für uns. Und heute Abend dürften wir, glaube ich, einen besonderen Abend erleben.
Ob Sonne über Schatten wird, das werden wir dann auch noch sehen. Meine Damen und Herren, auch von meiner Seite guten Abend. Ich darf Sie herzlich begrüßen heute. Bei uns heute geht es, wie gesagt, um das Thema Finanzmärkte und Auswirkungen auf diese im Rahmen der US-Wahlen, die am 5. November stattfinden werden. Bei uns wird es dann schon der 6. November sein. Und auf das möchte ich jetzt auch schon hinweisen. Ein erster Hinweis auch in die Richtung, weil es schon immer näher rückt. Wir werden am Mittwoch, den 6. November in der Früh ab 6 Uhr hier ein Election Breakfast veranstalten, das Sie gerne auch online besuchen und begleiten dürfen. Das wird circa 3 Stunden dauern. Wir werden hochrangigste Vertreterinnen und Vertreter aus Österreich hier bei uns haben und die hoffentlich dann schon bekannten Trends und Entwicklungen der Wahl hier beleuchten und diskutieren zu können. Also wenn Sie Interesse haben, dann sind Sie dabei. Sie können sich gern dann auch bei uns melden und Sie kriegen, wer bei uns dabei ist und Mitglied ist, bekommt ja sowieso die Mailings von uns. Vielleicht noch was Technisches. Wenn Sie jetzt dabei sind, freue ich mich. Wer später einsteigt, kann das Ganze auf YouTube gerne nachsehen, auf unserem YouTube-Kanal. Spannende Diskussion, sehr aktuell. Und das, was natürlich auch ist, wir sind eine interaktive Veranstaltung. Das heißt, wenn Fragen sind, bitte wie immer in die Kommentarfunktion hineinschreiben und ich gebe dann die Fragen an das Podium weiter. Bitte auch hier im Saal einfach nur Hand heben, wenn Fragen sind und dann an das Podium die Frage stellen. Ja, die nächste Veranstaltung, aber vor noch den Wahlen, ist nächste Woche am 22. November zum Thema Skepsis in der Wissenschaft, was natürlich auch in der aktuellen politischen Situation nicht irrelevant ist. Soweit von meiner Seite. 22. Oktober, Entschuldigung, aber danke für die Information. Super. Ja, dann bleibt mir noch einen schönen Abend zu wünschen und wir übergeben an das Podium, bekannterweise und bewährterweise von Monika Rosen moderiert. Danke schön.
Danke.
Guten Abend, meine sehr verehrten Damen und Herren. Ich freue mich ganz besonders, Sie zu diesem Super Tuesday hier in der Österreichisch-Amerikanischen Gesellschaft begrüßen zu dürfen. Mein Name ist Monika Rosen. Wir haben heute also einen genuinen Wall Street-Abend, wieder einmal, wenn Sie mir gestatten, das zu sagen. Ich freue mich ganz besonders. Es geht eben um die amerikanische Wahl, die Präsidentschaftswahl am 5. November. Und die Frage, inwieweit diese Wahl die Aktien oder die Finanzmärkte insgesamt beschäftigt. Sie sollte es tun, denn in einer aktuellen Gallup-Umfrage haben 90% der befragten Amerikaner angegeben, wirtschaftliche Themen seien extrem wichtig oder sehr wichtig für sie bei der Stimmabgabe. Das heißt, die Kandidaten tun schon gut daran, das Thema Wirtschaft ernst zu nehmen und sie wissen das ja, es gibt den alten Spruch, dass sozusagen die Bürger nach ihrer Brieftasche abstimmen würden. Die Themen, die sich daraus ergeben, sind vielfältig, wenn ich ein paar anreißen darf. Steuern natürlich vor allem das Thema Zölle, das ist ja irgendwie so auch ein Steckenpferd von Trump. Daraus sich ergebend aber auch das Thema Inflation. Da ist dann die Frage der Zinsen, der amerikanischen Geldpolitik und der Federal Reserve nicht weit. Aber eben auch so Themen wie das steigende amerikanische Budgetdefizit, die steigende Staatsverschuldung. Sind das unterschätzte Gefahren? Ist das etwas, was der Markt vielleicht ein bisschen zu sehr auf die leichte Schulter nimmt? Natürlich auch das Thema Energie, immer ganz, ganz wichtig, gerade der Benzinpreis für die Autofahrernation USA von zentraler Bedeutung. Und daraus sich ergebend aber eben auch die Fragen im Zusammenhang mit der sogenannten Green Transition, also wie nachhaltig, wie grün denn der Übergang in ein neues Energieregime hier sein kann. Last but not least die geopolitischen Fragen, die man hier sicher auch nicht außer Acht lassen darf. Wir erleben sehr unruhige Zeiten von der Ukraine bis zum Mittleren Osten. Wir erleben eine Remilitarisierung der Welt. wie das Jamie Dimon, der CEO von JP Morgan, in seinen Ausführungen unlängst genannt hat. Auch das auf der einen Seite natürlich ein menschliches, aber auch ein ökonomisches Problem. All das sollte eigentlich den Märkten zu denken geben, es tut es aber eigentlich nicht. Wenn ich mir anschaue, der S&P 500, der amerikanische Leitindex, hat in den letzten 24 Monaten 60% zugelegt. 60% plus in 2 Jahren seit dem Herbst 2022. Also ein bisschen hat man das Gefühl, dass es für die Aktienmärkte kein Morgen gibt. Eine Zahl gebe ich Ihnen noch, dass eben die Erwartungen durchaus auch sportlich sind, was die Gewinnsteigerungsraten der Unternehmen betrifft. Für heuer im S&P ein Anstieg von 10% erwartet, für das nächste Jahr dann sogar 15%. Also falsch machen dürfen wir eigentlich nicht viel. Die Erwartungen sind entsprechend hoch. Die Kurse sind es eigentlich auch. Das heißt, wenn ich jetzt ein bisschen Devil's Advocate hier spielen möchte, möchte ich fast sagen, es ist angerichtet für eine Korrektur. Aber danach schaut es nicht aus, oder doch, das werde ich jetzt gleich mit meinen beiden Gästen hier am Podium diskutieren. Meine Damen und Herren, Sie wissen das, der Rainer hat es eingangs gesagt, selbstverständlich gerne hier im Saal und auch online auf allen Kanälen, auf denen Sie uns folgen. Bitte posten Sie Ihre Fragen herein. Der Rainer beobachtet wie immer alle Kanäle und signalisiert mir, wenn Fragen da sind. Ich darf Ihnen also jetzt die beiden Herren, die heute Abend hier unserer Einladung gefolgt sind, sehr gerne vorstellen und darf Sie ersuchen, hier mit mir sehr herzlich zu begrüßen. Auf meiner Linken Harald Holzer. Er ist der Chief Investment Officer der Kathrein Privatbank. Herzlich willkommen.
Danke.
Auf meiner Rechten Daniel Hardy. Er ist Senior Research Associate des Wiener Instituts für internationale Wirtschaftsvergleiche. Herzlich willkommen. Schön, Sie da zu haben. So, wie sich das für einen richtigen Wall Street Abend gehört, beide Herren haben als Muttersprache Englisch. Das heißt, sie werden phasenweise oder vielleicht überwiegend die Fragen auf Englisch beantworten. Sie verstehen und sprechen aber ausgezeichnet Deutsch. Also Sie können gerne auf Deutsch die Fragen stellen. Herr Holzer, ich fange mit Ihnen an. I'm going to ask you in English because it comes to me naturally. Are markets too cavalier about all these problems? Are we too laissez-faire and not really concerned enough with what all could go wrong?
In our opinion, no. We believe the bull market will continue, at least for another year. You already mentioned one of the reasons. Earnings growth is expected to continue. Even this year we saw earnings revisions upward. After the second quarter, we'll see now third quarter earnings season is on the way. Earnings growth goes up, interest rates are coming down, and that's usually a good combination for the stock market.
Daniel, will interest rates indeed come down as much as expected? How inflationary are the measures that the two candidates or that the next administration is ready to implement?
I think that the inflation has definitely come down, and we're freed from the supply side shocks we saw in the recent years. However, I think that we have a tendency for real long-term interest rates to rise. It is after inflation for a tendency for rates to come back up again, in particular because the fiscal pressure is large. And this is quite bad dynamics. Even if they do nothing, the fiscal dynamics is bad. And if the candidates' proposals are generally expansionary and Trump's proposals are especially expansionary. Now, whether he can implement them is another matter.
Yeah.
It's not just one election, it's also the congressional elections for the House and a third of the Senate. And how that plays out could be a big influence on how much the candidates will actually implement their policies. Now, the baseline for me is that the Senate and Congress remains pretty log-jammed. So there'll not be major changes there. If Trump has large coattails, as they say, and has a free hand, there'll be much more expansionary policies.
Just to get everybody off the same page. At the moment, the Senate is narrowly Democratic and the House is narrowly Republican. And you think it will just about remain that way?
That looks like the case now. I think the way, it's a complicated system, depends which seats are going where. I think there's some chance actually the Republicans actually maybe getting now majority. But the parties are not necessarily that disciplined. So not everyone votes on party lines all the time. You can imagine.
All right.
Some things be rejected.
Okay, so well, while we're at it, I'm going to put you on the spot. Who's going to win the election for the White House? We might as well go all in.
I'll start with an easy one. I think Harris wins the popular vote.
All right.
I think that I'd say she's mildly favored to win as well.
Okay.
In the swing states.
All
but
right.
this far outside my area of expertise.
All right. Mr. Holzer, Harald, any differing opinions?
Yeah, maybe 2 points. First, on interest rates, I agree that long-term interest rates probably will not come down much further, 4% on the 10-year in America. Fed funds will come down. The markets expect from 5 to 3 3/4. At the end of an interest rate cycle, the yield curve is normal, so long-term rates higher than short-term. That we're going to see, so we agree, I think, there. On the election, or also on the deficit, it's going to go up. We know that many bonds are maturing now, federal government bonds with low-end coupons, and those coupons will be replaced by high coupons. And the debt servicing cost will rise in the next 10 years to be the biggest item on the budget. So there will be pressure on the government, whoever is ruling, to do something about it. Either they continue to increase the deficit or they will reduce spending. So that will come into focus, and I think the bond market will, at some point in time, react to this fact. Hasn't yet, that's true, but at some point in time, the bond market should react. As regard to who's going to win, it's very close. Where I feel most comfortable saying is that the Senate will go Republican, West Virginia and Montana will flip, and the rest stays the same. So you have 51 to 49. The House of Representatives, very even, and also the presidency, very even. The swing states are all within the margin of error.
So so that was a lot to digest. I'm gonna unpack this here a little bit. So if the Senate goes from narrowly Democratic to Republican and the House stays as it is, then we have a Republican Congress, right? So if Trump wins, he has a free hand, and we get a clean sweep. Are you telling me that?
That's a possibility.
Of course it's a possibility, but I mean, how likely is it?
I'd say a split one way or the other is the most likely. So either a Harris presidency, Republican Senate, Democratic House.
Okay. All right. Okay. So they switch sides.
Yeah.
All right. Okay. Okay. Or Trump wins and then
Senate, Republican, Democrat House.
All right. Okay. Okay.
Both equally likely.
All right. So in short, we're going to have a very narrow race.
Absolutely.
Okay. But I think from what I understand, a clean sweep is not your most likely scenario.
No.
Yeah. And you agree?
I agree.
Yeah.
Yeah.
All right.
Also, well, particularly the senators tend to act fairly independently, and there's also, I think, still remnants of a kind of Wall Street republicanism, which is not prepared to do just anything in terms of Trump presidency. We saw this in 2016, that the Mnuchin, the Treasury Secretary, acted fairly conventionally. Last time around, the fiscal policy was not as radical as it might have been.
Yeah, okay.
Now, whether this doesn't have to happen, but I mean...
And Trump is very much attuned to the stock market. Not every president is, but I get, he looks, certainly takes credit for it if it goes up and he looks at it. Yeah? And that has not always been the case with every president, at least I find. All right, so let's talk perhaps tariffs. How do you, Trump keeps mentioning them. They will, of course, be inflationary. Do you think that he will be able to push all of them through? How high will he go? Apparently, also in terms of taxes, he will need funding channels. How do you see that?
there's a lot of debate about how much a president can do just on his executive power.
Yeah.
I mean, the Constitution says that Congress sets the tariffs, but they deferred to presidents quite a bit in the past. I think to have the sort of sweeping, high-level, across-the-board tariffs that Trump has been proposing would probably require congressional action, and therefore Congress to be very much at his beck and call. If that's not the case, I think more targeted aspects of less, perhaps, macro-financial importance. As you've seen, in fact, Biden's also had de facto protectionist measures in this kind of industrial policy aspect, whether you call it tariffs or subsidies here or there. And I think this is going to continue, perhaps under a different name, but not so different in other cases. What's extreme cases, Republicans could, Trump has control of both houses and does whatever he likes, and he sets about large tariffs across the board. I don't think that's very likely, but certainly a possibility. But the baseline is not so different.
That is, I think, an underappreciated fact that Biden left or virtually all the tariffs in place and introduced some new ones. Yeah. So talk about spin there a little bit. Do you have a differing opinion, or?
No, I agree on most parts, and unfortunately, the global deregulated world free trade framework is breaking down, and I think that's going to continue to break down regardless who becomes president, regardless of who controls the Senate. You see it in the EU as well. You have tariffs on Chinese automakers being discussed or passed already, I don't know. So that's unfortunate in general, I believe, for the global economy. The executive orders you mentioned, how much can a president do? Unfortunately, presidents have done too much, in my opinion, with executive orders, partially because Congress doesn't pass laws. Congress has not passed a budget since 1997, since Clinton. Since then, it's been continuing resolutions, omnibus bills to keep the government running. Everybody knows in this room, we hit the debt ceiling. There's always a crisis. They raise it. It's not good politics, and it's unfortunate.
All right. So how? Okay. So you think that the budget deficit will rise, that there will be, to a certain extent, inflationary pressure. How is that reflected in your asset allocation? Let me ask you then.
Yeah. Right now, as I mentioned, we're bullish on equities, so we're still overweight equities.
And U.S. equities in particular?
We are well weighted in U.S. equities. Yeah.
What does that mean?
60%.
So that is roughly
a little bit below the benchmark.
All right. Okay.
On the bond side, especially the U.S., we're shorter duration than the benchmark. We do see Fed fund cuts, but we think that the market is pricing in too many cuts, similar to what we saw at the beginning of last year, where 7 rate cuts were expected. We've seen 50 basis points.
Yeah.
Next year, 1.25 are expected. We think that's too optimistic.
I was going to ask you, do you think they'll go for another 50 basis points?
No.
No. But will they do 25 at each of the 2 upcoming meetings this year?
At least at one of them.
All right. Okay, because the next Fed meeting is right after the election.
Right.
6th and 7th of November. So, of course, that will make for an interesting scenario. Do you have a differing opinion, Daniel?
Not particularly. Again, I mean, just used to mention some numbers. I mean, the fiscal deficit this year is about 7% of GDP. The time the economy is humming along. The projections as an unchanged policy is about 6-7% into the indefinite future, as I mentioned, for the demographics and the interest payments just keep on going. And then there's little room to do much about it unless you have a lot of determination, political capital, because discretionary spending is 4% of GDP. You could eliminate the National Institute of Health and the roads and so on, and you still wouldn't solve the budget problem. And this looks like, in fact, I'm rather pessimistic about this being really addressed until the pressure becomes much more intense.
What would make the pressure more intense, you think? Rising yields, right?
Ultimately, there's that. The market tends to exercise discipline only when we're pretty late in the game.
Yeah.
But, I'm from Britain, and we had the recent experience of Ms. Liz Truss, which kind of salutary experience.
I was going to get to the UK in a minute.
You can some certain actions can provoke a very strong market reaction, a kind of Minsky moment, where they think, oh my goodness. Like, I think, for example, if Trump were to attack the independence of the Fed, the markets would take this very badly. Very, very badly.
Do you think he will replace him in 26? You're an expert on this. Can he replace him anytime? Is that doable?
I think legally speaking, Powell is pretty secure.
Yeah?
I mean, there might be political pressure, but it's very secure.
So you don't think he will? So you don't think he will be replaced? But you think if Trump gets in, he will replace him when Powell when his term expires?
That could well be, yeah.
Yeah?
That's in several years' time. That's
okay.
beyond Trump's planning horizon, I expect.
That may certainly be true. We have questions coming from the audience. Here's Rainer. Bitte sehr.
I translate them into English because there are a few in German, a few in English. Will Trump, in brackets USA, if he wins, put less emphasis on Europe so that the euro will get in problems or will collapse? That's the first question. And the second one is Inflation Reduction Act. How will be the future of the Inflation Reduction Act? Will Democrats or with Republicans winning?
Maybe I'll take the first question. I do not think the exchange rate will move strongly in one direction or the other under Trump. We believe that the dollar-euro exchange rate is going to stay in this range where we are. Both central banks are lowering rates about at the same pace. Inflation is about the same. Growth is higher in America, which is good. Deficits are higher in America, which is bad. So there we don't really see much impact by Trump or Harris presidency.
You don't think that Trump will mean a stronger dollar because of the inflation will be higher, therefore fewer interest cuts?
Hard to say at this time. I mean, everything that's being promised now, you have to wait till see how the Congress's composition. And then we'll take it from there. Yeah.
All right. Okay. So we certainly don't see the euro collapsing. Let me get that straight. Yeah. Neither do you, even though you're British. I hope.
Well, Trump has talked about having a weaker dollar, but again, it's not something the president actually controls. And then we'll see how it interacts with the fiscal side and the independence of the Fed and the tariffs together. On the Inflation Reduction Act and all that assemblage of policies to promote certain sectors, I think that too is likely to survive, if not, perhaps with a changed name and with more emphasis on the fossil fuel sector rather than renewables. But I think this is a very politically attractive thing in the United States. And there are lots of spending in lots of areas, and the new sense that they have to have a more vigorous industrial policy to remain competitive in high-tech sectors. And that, I think, continues, no matter what wins. It's a sectoral shift, but not the overall.
All right, okay, a fair point. And since we're at it, what about energy policy? Now, obviously, Trump favors fossil fuels, at least that's the general thinking, and Harris is more, of course, for renewables. How do you see that playing out?
Indeed, I think that remains the case. The reality is that the fossil fuel industry in the United States has expanded very much in the last 4 years under Biden. Particularly, I mean, oil fracking and the gas exports has been doing very well, thank you. I don't expect that to change. I would point out that I can remember 2016, and Trump was all about promoting the coal industry, and the coal industry is continuing to decline no matter what. I mean, so these things, I expect the Trump administration would de-emphasize renewables, which I think would be unfortunate because it's something where America has a lot of comparative advantage. But fossil fuels do very well in America.
Why are you so certain that West Virginia, coal country, is going to flip? It's going to flip from what to what? I don't know.
It's Democrat Manchin. Senator Manchin is retiring.
Okay.
And in the surveys, it's a huge lead for the Republican candidate. Montana.
So it'll go Republican, you're telling me. Okay.
And Montana is Democrat right now, and the Republican there leads also. Yeah.
All right. Yeah. Okay. Yeah. I see. Okay.
Maybe one point to why there is no market pressure on the bond side and then the dollar. 2/3 of U.S. government bonds are held by Americans, and the biggest investor is the U.S. Fed. And America's in the comfortable position of having all that debt held by friendly investors, the Fed. Even though the Fed is reducing, it's reduced its balance sheet by $2 trillion, I think. A good portion of that is by not reinvesting in treasuries. The Chinese only hold $300 billion, which is not much as a percentage. And that's one reason the Americans can get away with this deficit spending. As long as the Americans are comfortable holding the bonds, there's not that big of a pressure on it.
So you're telling me that the yields are not that much in jeopardy of rising as we think, at least exactly. in relation to the high deficit?
That would be my explanation. If any other country was running these deficits with unemployment where it is 7.5% deficit, debt to GDP at over 100% or 100%, there would be much more pressure on the currency, much more pressure on the bond market, as England found out.
Certainly, Southern Europe has been a case in point. Okay, and tell me again, because I find this extremely interesting. You think that 10-year yields in the United States will stay at or close to 4%?
4%. I don't see much upside as a price upside. Yield downside.
So yields not really going down in your opinion. Why not, if the Fed keeps cutting rates?
Because I think you will need a certain real rate above inflation. If inflation goes to 2.5, what the economists right now expect, 1.5% above inflation is 4. Maybe you need more than that with the deficit, and that's why we don't think there's much potential for the 10-year yield to drop.
Do you agree?
Sure. If anything, I think the real yield might go up a bit as inflation comes down, nominal rate about constant. Because, you just need to induce people to buy this stuff. And historically speaking, even 2% real rate over 10 years is pretty low.
Right.
Yeah.
Exactly.
This is not exceptionally high at all.
All right. Okay. So, in other words, we won't really have a big portfolio contribution from the bond side, at least in an American portfolio, which is what we're focusing on at the moment. But just because this entered my head as you were telling me that you're slightly underweight in the United States, so if you're overweight equities overall, which regions then do you favor? You must be overweight somewhere.
Europe and Japan, and that's primarily driven by the valuation gap. The valuation of European equities, but I've been saying this for 5 years.
I didn't want to put you on the spot, but heaven help me. I mean, Europe has been cheap for a long time.
Exactly, but it's gotten even cheaper, and at some point in time, it has to snap back.
Does it?
Yes.
I mean, don't you think there will be a certain valuation gap that is sort of here to stay?
A certain one, yes, but we are really at the extreme. Yeah.
Okay.
So a little reversion to the mean. Europe stocks will remain less expensive than American ones. Yeah. But the gap will close.
All right. Okay. Talk to me about sectors. Which sectors do you particularly favor?
Well, right now, you still have the Magnificent Seven driving the market, but we think that the earnings gap between the Magnificent Seven and the rest of the S&P is closing. The audience here may or may not know that most of the earnings growth in America the last 8 quarters has come from these 7 companies. But this quarter, that gap will close, and the rest of the companies, and we saw that with the big banks, are catching up.
Yeah, but of course, that is true. It also makes the market a little choppier, as we've noticed lately, And of course, volatility rising ahead of the election.
Sure.
But that should come down as time progresses. But you think that the rally will broaden up, but for now...
Exactly.
But for now, you're still bullish on the Magnificent Seven.
Yes, but we're underweight because we're transitioning into that phase,
All right. Okay. We've got 2 questions from the online audience. Take it away, Rainer, please.
There's a gentleman called Harald, and he asks, why do shares at the US stock exchange perform so well? Is it irrational exuberance, or whatever this is? Exuberance?
Irrational exuberance.
Is there an underlying trend like artificial intelligence that is driving them up?
Well, if you look at earnings growth the last 5 years even, Earnings have grown faster in the US than in Europe and the rest of the world. So it's not irrational exuberance from that point of view because earnings have gone up faster. But it is true that the valuations also have gone up faster in America. Globally, in the short COVID bear market, price-earnings ratios dropped to 13. They've gone up to 21 now, which means that stock prices have gone up faster than earnings, and the same is the case in America.
For the
So
younger...
not irrational exuberance, not Alan Greenspan.
I was going to say, for the younger members of the audience here, a former Fed chair, Alan Greenspan, called the stock market rally, I think in the late 90s, he called it irrational exuberance, and that unnerved the markets.
Exactly.
Yeah?
1997, it went up by 100% and then crashed 3 years later, and he said he was right. Yeah. Kudos on your memory, sir. I'm deeply impressed.
We have another question, I think.
There's another question written on YouTube, of a YouTube viewer. How will the markets will react if the Democrats will win? Are the markets going down and with the Republicans up? And aren't there investments in sustainable shares which will rise if the Democrats will win the elections?
How will markets react if the Democrats get back in? That's a good question, always.
There will be, I think, some sectoral shifts. I think the Republicans got, as I mentioned earlier, more favorable to the fossil fuel sector, possibly more favorable to sectors benefits from protectionism more. So corresponding, I think a Democratic win would be favorable for the more sustainable renewables sectors. I don't think that... I think a large part of the market will be relieved if Harris won, and just reduced uncertainty about the direction of policy, and provided she wins and is inaugurated and all that goes fine, I think we'll be relieved.
I hate to say that, but that's the 800-pound gorilla in the room, yeah? So if Trump loses, what is he going to do? But let's just assume that it'll all go according to the playbook, yeah? Yeah, okay, so then your conclusion then being what? So what, overall, you think markets will take it in their stride?
Oh, yes. I think there's almost more of a risk of a Trump win leading to a burst of enthusiasm, thinking this is going to be favorable to corporate profitability, favorable to plutocrats and monopoly rents, and having like a little bubble following a Trump win. I think there's more of a worry.
That's what we had last time.
Exactly. Yeah.
Because overnight he gave some kind of a speech that everybody found very reassuring, and the market just took it from there.
It's assuring to corporate profitability, not necessarily to the well-being of the United States.
Yeah.
Because a lot of this is redistribution between different sectors.
All right. Okay.
Yeah, maybe a bit of history. If you look back to 1900 and based on the Dow Jones Index, the best combination for the markets historically was a Democrat president and a split Congress, so one of the scenarios that I painted. The worst combination would be a Republican presidency with a split Congress. That was historically the worst. With one caveat, the 1929 crash and the 2008 crash were both Republican presidents with split Congress, so that changes the statistics significantly. But so medium term historically that was crashes. A good So that historically that would be the best combination. The second best historically is Republican president, Republican Congress.
Of course, in terms of the White House, we've had with Clinton and Obama 2 Democratic presidents who presided over a stock market boom. You could say in one instance with Obama, it was a little bit of luck in terms of timing after the financial crisis, and Clinton, it was the tech boom and Y2K and all of that. So if you're going to be a Republican, you could say, well, there's a little bit of luck there too, right?
Sure, and I think that's the statistic I just gave is often overstated. Much more important are fiscal and monetary policies, GDP growth, regulation, and all those other things. Yeah.
Excellent point, Daniel. We have not talked regulation. especially in terms of tech, but also in terms of other sectors. And I think that is perhaps sometimes overlooked fact. How do you think this will play into the results?
As far as it's quite difficult to say what the candidates really think because not being much addressed. Presumably, Trump is more in favor of deregulating across the board. I think the Democrats, continuing as Biden, well, the biggest issue will be about competition policy and whether they'll continue to put pressure on the big firms to either break up a bit or just not quite sure what they're going to really do about that. So far, not that much has really happened, I think. In some ways, the driving force is also the Europeans actually doing more than the Americans in this area.
Yeah, of course.
And that's not insignificant, right? I mean, in many areas, the EU drives global regulation. If Harris wins and has significant, good enough congressional backing, I think there would be more effort to reduce some of the near monopoly positions of some of the big companies in America. I think that's probably as far as one can say now. But I don't think there's a particularly strong vision there to do something.
You made a very good point.
Yeah.
Europe is leading the world in regulation, China in production, and America in innovation.
Yeah, and I'm not sure that is something we need to be particularly proud of. But on the other hand, of course, just to give these big companies a free rein may also be not the best idea because they're becoming almost states-like. Yeah, so that is another consideration. We have not really talked geopolitics. And the effect all these crises are having on financial markets. So far, they seem to be limited, but of course, that could change overnight. How do you see the world in terms of geopolitical crises? And dare I say it, how do you prepare your portfolio for such an event?
Yeah, I'm not a foreign affairs expert by no means, but historically, political crises usually have a hard, sharp impact on the markets, short term, and then they slowly are worked out. And we've seen that again with the Russian invasion of Ukraine, the war in the Middle East. Short-term impact and longer-term no impact or little impact that we see now. Of course, you see the various aspects in the Ukrainian grain production or the oil coming out of the Middle East and things like that. But for the most part, short-term impact, longer-term, not that important.
Forecast for the oil price?
As we do not see a global recession, probability has gone up. We do not see that. Interest rates coming down should be supportive for the economy. Chinese fiscal and monetary measures to support their economy. Oil prices has a good floor on it.
All right, so you don't see it falling significantly, but do you see it, so you more or less staying on this level?
Staying on this level. I mean, there's some of the Middle East tension is priced in the oil price.
Yeah.
Should that fall away, there would be some downward pressure, but I think on the economic front, it's well supported.
Any differing opinions?
No, particularly, I think
China?
that, well, first of all, the commodity price and oil prices, indeed, in real terms, most energy and commodity prices aren't particularly high or particularly about normal sort of range. Obviously, the geopolitical risks are very large. I could not figure out in my mind how the US election result would affect the probabilities of them being realized. It's very difficult for me to, I'm not my area of expertise, not sure anybody could really say anything about that. It is true the United States is this continent unto itself. It's an energy exporter, it's a huge domestic economy, it's a safe haven, so many crises can be rather good for the US economy. They get cheap money flows in and their exports do well. So, you know, they're not personally that affected, provided they don't get involved. It's economically good for the United States in some ways.
And
some more than others,
yeah.
right? So a crisis in East Asia, you know what we mean by that, that could be very, very disruptive.
More for the US than for us in Europe, right?
Everybody.
Okay, because of chip production?
Chip production, the volume of trade is immense, the interactions are immense, the direct investment is just so much bigger economically than anything else. I mean, you know, Ukraine is very important for us here. In parts of Ukraine used to be in the same country as Austria. But economically speaking, Russia and Ukraine, not that big a deal. Whereas China, Taiwan, that's a lot. When the trade volume is immense, financial flow is immense.
What's your allocation in terms of emerging markets, given the fact that I think, 2/3 of the emerging market index is indeed China? How are you allocated there?
We have 0 in China for the last 3.5 years, mainly driven from a governance aspect. We observed that the founders of companies disappeared for days, months, weeks on end. We observed taxes on corporations for no discernible reason, and we said in this environment the shareholder's not going to be compensated for the risk he's taken, and we've moved completely out of China.
And you will keep it that way, because some houses are beginning to turn more optimistic on China and seeing this as a once-in-a-generation opportunity, if you will.
That's something we talk about, and the valuations have gotten cheap. But in our opinion, aside from the governance topic that hasn't improved, the Chinese economy is experiencing its own financial meltdown right now, a Lehman-like crisis, 90 million housing units empty or unbuilt, and you see by the reaction of the government and of the central bank, I wouldn't say panic yet. They haven't brought interest rates to 0, but they probably need to. Yeah.
Your view on China?
I think it's probably a bit more informed than I am on this. I want to actually shift side and say that we shouldn't ignore the rest of the emerging market world. Some parts doing very well, thank you. Others quite vulnerable. And they're perhaps, again, economically not that important, but in terms of well-being and in terms of politics important. Many emerging sovereigns are in difficult shape, and tendency towards rising real interest rates can be quite bad for them. Again, it's, many countries economically are not important to the world stage, but lots of people can be very badly affected.
I've just been thinking that usually when the Fed cuts interest rates, that goes in emerging markets' favor. But you're telling me they're not doing enough.
There has been some of that, but we discussed earlier that we think that the trend will be for somewhat higher real long-term rates.
All right.
Not so much a short-term anything, but what the trend will be for higher real rates, just because of the competition for savings from the US and Europe and so on, squeezing out some of the emerging market countries. Not China, not perhaps India, but places in Africa, Latin Americans.
I was going to ask you, which countries do you see as particularly vulnerable? Because, Africa, of course, is a huge continent. I'm not saying that, but in terms of financial markets, maybe not the biggest player. But what about Southeast Asia, for instance?
They're probably looking in relatively good shape, actually. And to some extent, they also have this aspect that, at least traditionally, American protectionism has been good for them because we get substitution towards Vietnam and Thailand, whatever, and India and Bangladesh rather than China.
And isn't the Ukraine crisis also, as terrible as this sounds, good for them? Because now everybody's going China +1, and Southeast Asia is a big beneficiary of that trend?
I don't see the connection between Ukraine and China perhaps that much. Again, it's very much, they're in certain sectors.
Okay. Well, it's my perception that ever since Russia invaded Ukraine or attacked Ukraine, everybody's become much more concerned with security issues, whereas before that was really sort of pushed to the back burner.
Sure.
But
you do also see nearshoring going on, for example, in Southeast Europe. Indeed, my colleagues at VAV just produced a study on this. There's distinct movement to more production in ex-Yugoslavia, Southeast Europe, things, for example, for the Europeans.
Okay.
And perhaps the US as well, near home to them too.
All right. Okay. So nearshoring is something that I think that is something that Trump also wants to do, isn't it?
Yeah, I think Harris-Trump, not much difference there. The trend will go on that way. Maybe one point on where are rates too low. Germany 10-year bonds 2.25, inflation 2%. In my opinion, in our opinion, too low. We need a premium above inflation, and that's too low. Yeah. So I think that the biggest risk for a bond market is the Euro government bond market right now.
Interesting point. Do you think that we're pricing in, or we are expecting too many cuts from the ECB?
Yes,
from the ECB,
cuts.
I'm talking ECB,
yes,
not Fed.
Also too many cuts.
Yeah.
And even if you discount all the cuts that are priced in, you're getting to 2% about. At the end of a cutting cycle, long-term rates have always been higher than short-term rates. German rates are 2, ECB goes to 2. Where should 10-year bond yields be in Germany? So there's not much potential for German bonds.
So we're talking stagflation then, because they're not sporting
implied.
much growth.
That would be implied, yeah.
Well, not much inflation. Right.
And you're still, we're getting to the question in a moment, Rainer, but I'm flabbergasted, but you're still overweight European equities under those circumstances.
Lower interest rates help valuations of stocks.
All right, may it be so. Rainer, next question.
Jetzt in Deutsch bitte, weil die Frage auch auf Deutsch gestellt wird. Jetzt werde ich eure Deutschkenntnisse ein bisschen prüfen. Ich habe jetzt mehrere Fragen zusammengenommen, die ähnliches Thema umfassen. Es ist heute in den letzten Tagen einige Studien erschienen, dass die EU weltweit zurückfallen wird. Wie wird die Zinsantwort von EZB aussehen? Und heute auch eine Studie, dass interessanterweise in Russland und in der Ukraine es ein Wirtschaftswachstum geben wird. Was macht Europa falsch?
Ukraine, weiß ich jetzt nicht. Okay, also.
Das habe ich selber gehört, das war heute eine Studie.
Das Ukraine-Wirtschaftswachstum.
Ja.
Alles klar, gut, okay, bitte.
Well, I think Ukraine and Russia, special cases. The case of Ukraine is partly a matter of recovering from enormous negative shock. Russia also, it's a war-footing economy, the government spending like crazy, investing in armaments. That's what's driving that. And meanwhile, sanctions are not really hurting enough.
I was going to ask you that. So apparently the sanctions are not working, or their fossil fuel export status is counterbalancing it?
They manage to export enough of the stuff one way or the other, perhaps through subtle means, and then increasingly to other parts of the world which aren't putting sanctions. They get a lower price for it.
Yeah.
So it's to the benefit of their export customers enjoy lower prices for these commodities from the Russians. They're good. You know, if I wasn't concerned about Ukraine, I'd probably enjoy it too, right?
Yeah.
You're on the other side of the planet.
And you're not really worried about that?
Yeah.
Yeah?
Well, if I'm that country. And the European model, this is like a whole subject for countless dissertations, why European economy is not more dynamic. You know, and what the problem is also then, there's so many aspects one could mention here. I don't think it's a lack of demand, particularly in individual countries. You know, Austria is a small, open economy. There's very little Austria can do about the level of demand within Austria. Right? But you can do something, I think, about these sort of structural issues, particularly, you know, if I was Austrian Chancellor, I'd emphasize basically investment in human capital and R&D. If you want to be a really high-income country, you need to have well-educated people doing advanced technology. And that's not something which turns things around in a few years. But again, this is well beyond the top of American elections.
No, I realize, but I mean, so was the question really, yeah? Okay, all right. Do you want to add to that?
Ja, gerne. Also aus meiner Sicht, die Frage war auch, die EZB wird unterstützen. Ja, es werden Zinssenkungen kommen, löst aber die Probleme nicht von der EU. Deutschland hat das Thema der Energiepolitik, die hohen Energiekosten, Standortsproblem, hohe Arbeitskosten, Produktivitätsthemen, und das gilt mehr oder weniger für ganz Europa. Und Regulierung ist auch ein Thema in Europa, das schwieriger ist für die Unternehmen in Europa zu produzieren als anderswo in der Welt. Ja.
Wenn wir davon schon sprechen, wie sehen Sie denn die europäische oder die deutsche Autoindustrie? Ne? Die liegt ja eigentlich jetzt auch am Boden. Ja? Was sind denn da Ihre Einschätzungen?
Große Herausforderung für die deutsche Autoindustrie. Ja.
Ja, oder dann anders gefragt, bei welchen Sektoren sehen Sie denn dann die größten Chancen, wenn sie in Europa übergewichtet sind?
Also Banken erholen sich
Sehr gut,
jetzt.
passt, ja, super.
Ja. Die Luxusmarken, die französischen.
Na ja, Herr Holz,
Ja.
jetzt haben wir die 11 HMH, geht 6% in die Kisten wegen schwacher Nachfrage in
Genau.
China. Ja,
Auch attraktiv.
Ja, verstehe, aber es gibt die aktuellen Empfehlungen jetzt billiger. Das ist natürlich die Aussage, alles klar. Ja, okay, also eben mehr in dieser Richtung eigentlich und weniger in diesen zyklischen Industrien wo wir eher die Herausforderungen sehen. Ja, you want to add to that?
Not much, only to say that I think these are things which are not conjunctural, they are structural and not going to be solved anytime soon. And I think, for example, in principle, for a country like Austria, for example, transition to renewables is a long-term positive gain that adds to GDP. We need to get there with a lot of sustained investment and consistent policies over time, which is difficult to do, partly for political reasons.
Yeah, so that is, of course, a problem that we need to solve, no doubt, and the heavy dependence on fossil fuels, Russian fossil fuels to boot, is of course a problem. All right, so perhaps coming back to American policy, the American election and financial markets, we have not talked about an asset class that is doing extremely well, and that is gold. Given the fact that we do have crises in the world and interest rates are coming down, are you allocated in gold? What's your view there?
We always recommend two views on gold. There's the old Jewish rule: put 1/3 of your money in gold, 1/3 in stocks, 1/3 in real estate. So that's the one camp. And the other camp is the Buffett camp, where he says if you take all the gold in the world, the value of that, you can buy the 150, I haven't done the math lately, 150 largest corporations, you get a dividend of billions, and that'll increase every year. To store all that gold, to watch it, you have to pay millions. So for me, it's easy. Buffett quote, I have zero gold, everything in shares. And we advise our clients between those two camps. We do not we do not recommend to trade gold. We advise putting a fixed allocation in gold if you want to hold gold. Gold makes sense in a portfolio context. It does diversify. And if you want a trading opinion, yes, it goes up when interest rates are cut by the Fed historically.
All right, and you think we have more room to run
We have more room to run because the Fed will cut rates for at least 12 more months.
All right, okay, I understand that. And, I think that overall that just about covers the most asset classes. I did ask you about the shares and about the sectors you particularly like, but perhaps you can give me again your rundown in the United States, what your favorite sectors are there, just to refresh my memory.
Yeah, we're a little overweight in technology. There we do have an overweight position in some cyclical sectors.
Yeah.
But we're very close to benchmark weights. We're not deviating very strongly at this time.
From
on the sectors.
In terms of the sectors. Yeah. Okay. Which sectors? I realize you're going to tell me depending on the election outcome, but which sectors do you think look attractive right now? Will tech continue to do as well as it has done in the past?
It's well outside my normal comfort zone, but my suspicion is that, I tend to think there is kind of a long-term reversion to mean, and the tech sector seem pretty well valued compared to what the mean should be. And also gold. I mean, as long as there large chances of major wars going on, gold will be supported, but this might eventually end.
Is the AI hype, artificial intelligence hype, exaggerated? Is that overhyped, do you think, or do you think it'll pay off?
It's potentially a game changer, but I think it'll be something where, like we saw in other new industries, there are few major winners and lots of losers who people don't even remember anymore. So I need to like...
Yeah, that is certainly true. That has happened on both sides of the Atlantic. Yeah, how you positioned at Kathrein Privatbank there?
Yeah, we see it similar. We think that AI will be a game changer, will increase productivity. How quickly that is reflected in company earnings and various production processes, we will see. Different than 2000, though, these companies are making money and are making a lot of money and making more money every quarter. But a point is well made, 25% of the S&P is technology right now. Yeah. Historically, very high percentage, also very high concentration in 7 companies. And longer term, that's not healthy for the market.
I have to ask you, what's your view on NVIDIA?
It's very well priced.
A very diplomatic answer. I'm so glad the audience found the courage to ask a question. Please.
Do you consider a further downgrading of the rating of the US bonds as a possibility? If yes, we have seen it in the past once. What would be the consequences?
I think it would have a short-term impact, similar to what it did last time, and then it would be forgotten again.
So you don't think that, what you're telling me in a way is that the market will not penalize the United States
so
really
far it hasn't.
Yeah, and you don't think it will?
At some point in time, and there was a good point made, there will be some event, maybe it is the rating downgrade that wakes everybody up and says it could be a rating downgrade because I think 18% of the government spending will be used to repay pay interest on the bonds. And at some point in time, if spending on the other parts are not cut, that they can't even cut, the deficit will go up. You get to 120% debt to GDP. Somewhere in there has to be a wake-up call. But it's really hard to say what that wake-up call will be. Yeah? But I agree, it could very well be a downgrade. And I think there are many good reasons for a downgrade. Yeah?
All right, but we'll see who the rating agency is who is brave enough to do it. Yes, please.
I try to do it in English. So we had the ESG theme, we had the over-regulation Europe, but is there also a potential because of the need for new technology that there will be some disruptive technology on the way in Europe as well, or is there any potential to see there? And does the US election also sort of, mix these prognoses up?
So what you're asking is will Europe also have a disruptive technology that we invent or that comes from America?
Europe invents it, so Europe has the need for it, and Europe will be in need to be creative a little bit more in regarding all the ESG regulations, right? But will it change with the US election, with the outcome?
So will we invent, will the next Google come from Europe, is the question. That's a good one. Daniel, you answer that.
Yeah. Based on the recent history, I'm not optimistic of Europe creating some major global high-tech company out of nothing. There's not no tech industry in Europe at all, by any means. The record hasn't been good about these really transformative companies in the last period. I mean, if you go back centuries, certainly, but so I'm afraid don't see this really happening here. It's not that Europe cannot innovate and cannot change, and that there are not major things that can improve the economies a lot. I mean, it's nice to have this high end, but I think if we get the productivity improved for the less productive half of the population, that would count for a lot, both in GDP and in welfare.
Coming from a bank, what about startups? Why is there such a much more vibrant startup scene in the United States than here in Europe?
I'm happy you pointed that out. That is true, and there are innovative companies in Europe. Spotify is one. I don't know if it's a world changer, but made my life listening to music a lot easier. Bitpanda is a company in Austria that I would call innovative, successful. And the whole venture and private equity scene has grown a lot in Europe. It's by far not as big as in America, and many Speed Invest, if you talk to them, what's their strategy? We grow a company and then we sell it at a higher valuation to an American venture fund. But there are innovation hubs in Europe. Will the next Google come from Europe? Who knows? But there are very interesting startups and things happening in Europe as well.
We have a special guest in the audience from the Austrian National Bank. I'm delighted to see him. Mr. Schmitz, the final question goes to you.
Thank you so much. Can you say something about commercial real estate, both from a cyclical perspective and from the perspective of stranded assets?
Talk about stranded assets. There you go. So, commercial real estate in terms of stranded assets.
There's certainly an issue that many existing commercial real estate objects need to be heavily renovated to become energy efficient across the range of commercial real estate. I think there's a real chance of stranded assets, plus changes in working practice, that we work from home now and perhaps travel less. So that's a big sort of permanent shift in demand. I think that's, I can imagine quite a bit of becoming stranded assets. But again, the sector is diverse, right? There's offices, there's warehouses, there's factory buildings, so maybe going in different ways in different parts. It's a sector which I personally am relatively negative on, I think, going forward.
Yeah, maybe from an American perspective, I posed that exact question to a real estate fund manager. And the surprising answer for me is traditional commercial real estate office buildings. What percentage is that of the American commercial real estate sector? Surprisingly, I think it was 12%. I thought it was like 40. And he said what we're investing in is data centers, logistics centers, all these other things, telephone masts for mobile phones. That is commercial real estate defined as it is today, and not as maybe you and me see it, office buildings, apartment buildings, and those things. So he said it's not that big of a problem, at least not from the investor standpoint of view. Banks may, of course, have some exposure there, and individual investors, but from a macro perspective, he said he wasn't worried about it.
All right, we're just about out of time. This is a Wall Street evening. I'm going to give you the final word, Mr. Holzer. You tell me in brief terms what your investment outlook for 2025 is. Why is it going to be a fantastic year, you think?
Stock markets will go up by double digits again next year because earnings will continue to go up. Valuations will go up, so price earnings ratios will go up even faster than earnings. You have interest rate cuts by the Fed, by the ECB, that will drive stock markets higher.
Meine sehr verehrten Damen und Herren, dann wollen wir doch mal sehr hoffen, dass alle diese Prognosen eintreffen. Wir werden die Herren vielleicht in einem Jahr wieder einladen und schauen, ob wir uns da auch wirklich befinden. In jedem Fall habe ich mich sehr gefreut, dass Sie heute Abend dabei waren, und ich darf jetzt an den Rainer zurückgeben, der den Abend wie immer beschließt. Ich wünsche einen ganz besonders profitablen Abend.
Dankeschön. Und ich darf mich bei Ihnen fürs Zusehen und Dabeisein bedanken. Es ist natürlich wie immer, es sind jetzt einige Fragen in der zweiten Hälfte herausgekommen, die wir jetzt nicht mehr beantworten konnten, aber ich glaube, wir haben sie vorher auch im Gesamten beantworten können. Ich möchte mich ganz speziell bei der Kathrein Privatbank bedanken, die heute unser Partner war und den heutigen Abend ermöglicht haben. Ich darf mich bei unserem Podium bedanken, ich darf mich bei Ihnen fürs Kommen bedanken, und ich habe schon 2 Ausblicke gemacht. Nächste Woche, 22. Oktober, sprechen wir über das Thema Wissenschaft, und dann geht es auch schon in Richtung US-Präsidentenwahlen am 6. November. Hier bei uns ein Election Breakfast, das Sie dann auch online sehen können. Danke fürs Dabeisein und allen Ihnen noch einen schönen Abend. Auf Wiedersehen.
Sind wir draußen?
Danke sehr.